Good morning. We will pay attention to bank reconciliation today. Before we can actually complete a bank reconciliation statement, we have to understand the principles of the bookkeeping of a bank in comparison with the bookkeeping of the business. The bank account in the books of the business will, on the debit side, increase because it's an asset, and it will decrease on the credit side because we are taking money out of the bank. So when we put money in the bank, we increase the asset on the debit side. When we take money out of the bank, we decrease it on the credit side. And they treat the business as a liability. So when the business deposits money in the bank, the liability will increase on the credit side because that's more money that they have to pay out to the business in the future. When money is withdrawn from the bank, it decreases the liability, and therefore they will put it on the debit side of the account of the business. So if we compare the two sets of books with each other, we see that in our books, deposits will be on the debit side. In the books of the bank, deposits will appear on the credit side. In our books, the checks will appear on the credit side, and in the books of the bank, checks will appear on the debit side. So it's very important to remember that all the entries that we record on the debit side of the bank will be recorded in the books of the bank on the credit side. Entries recorded on the debit side will therefore be recorded on the credit side of the books of the bank, and entries recorded on the credit side of the bank account in our books will be recorded on the debit side of the bank. The bank reconciliation statement. When we want to prepare this bank reconciliation statement, we will take the closing balance in the bank statement. So it's the last figure on your bank statement that will be entered on your bank reconciliation statement on the same side as it appeared in the bank statement. So if the bank has a positive figure on the bank statement, it will be a credit balance. If there's a minus before the figure, it means that it will be a debit balance. Entries that were recorded in the books of the business. So the business already recorded these entries. Because the bank didn't know about this additional checks that was issued or the bank deposit, they will only record it in the next month. Therefore, the things that was already recorded in the books of the business will go into the bank reconciliation statement on the side that the bank will record it. So that means deposits will go in the bank recon on the credit side, and checks will go on the debit side. If the bank made mistakes, then the correction will be made in the bank reconciliation. If the closing balance of the bank account after any corrections omission, so after we completed all the other entries, will be entered on the same side as what the balance was brought down in your bank account. If we add up the debit side and credit side of the bank reconciliation, the two totals should now be the same. Entries that were recorded in the bank statement but not in the books of the business must now be recorded in the cash receipts and cash payments journal. Mistakes that were made by the business will have to be corrected in the books of the business. The closing balance of the bank account, after we corrected all these mistakes and we entered all the entries that were not recorded, will now go into the bank reconciliation statement on the same side as what the balance were brought down in the bank account. So in your bank account, you will have a balance at the beginning of the month, or it can be on the credit side, depending whether they tell you it's a favorable or unfavorable balance. Then all the entries that can still be recorded in the bank can be for a direct deposit, interest, or a check that was cancelled that we issued to a creditor. When it is the interest on current account, you must be very careful. This is the name of our account, but they can also call it interest on favorable balance, that means we have money in the bank, so it will also be interest that we receive, so it will form part of the interest on the current account. And then they sometimes tell you it's interest on credit balance. Now remember, this interest was taken from the bank statement. So if the bank statement gives interest because they have a credit balance, we have money in the bank. So this interest is interest that we receive. On the credit side of the bank, there can be a dishonored check. There can be interest on overdraft, the name of our ledger account, but they can also call it interest on unfavorable balance, or they can say interest on debit balance. That means on the debit balance on the bank statement, and that is when we owe money to the bank. So in our books, it will go on the credit side. If we cancel a check, it means that we have to cancel it on the debit side. Then we have to complete a second entry when we issue a new check. And we will record a third one as an outstanding check that the bank still has to pay out in the future. All expenses that's paid to the bank except interest is added together and will be recorded as bank charges. Then we can have a stop order and a debit order. A stop order is the document that we sign at the bank that they must pay on behalf of us, for instance, rent or insurance, because the amounts stay constant. They don't change from month to month. A debit order is signed at the City Council or at Telkom, and they will collect the money on behalf of us from the bank, and this figure will change from month to month. On the bank reconciliation statement, we will start either with a debit or credit balance, depending on what the balance was at the end of the month on the bank statement. We record deposits on the debit side, so outstanding deposits will be recorded on the credit side. We deposited money on the last day of the month. They closed their books before the end of the month. Therefore, they will only show this deposit on the next bank statement. Debit, that post-dated check. So if we issued a check to someone that is due in future months, it means the bank can only pay it out on the date that appears on the check. So this will stay as an outstanding check until this check is cashed at the bank. Outstanding checks are available to the people to deposit over a period of 6 months. So people don't always go to the bank immediately to deposit a check, and it will show as an outstanding check until they eventually go to the bank. If this check is older than 6 months, you will have to cancel it because then it matured and you can't use it anymore. If we cancel a check and we issue a new check, then it means my third step will be to show that that new check will be an outstanding check that will be paid out by the bank in the future. This bank account balance will depend on the balance in the ledger account. So if I bring down the balance on the debit side, it will appear on the debit side. What did we learn today? You must determine whether the entry must be recorded in the books of the business or whether it must be recorded in the books of the bank. If there was a correction of error, it means that the mistake was made by the business or the bank. So you must determine who made this mistake. Then determine whether the mistake was made on the debit side or on the credit side. Determine whether the mistake must be corrected on the debit side or whether the mistake must be corrected on the credit side. If the original entry was too small, the correction will be made on the same side. If the original entry was too high, it will be made on the opposite side to correct this mistake.